Joining me from St. Louis, Missouri right now, someone who has had a buy on Tiffany since the stock was trading at $22 a share. Matt Arnold is an analyst at Edward Jones & Company. Matt, welcome to Bottom Line.
Great to be here.
Matt, as Sheila Dharmarajan was just hinting, is the upscale shopper back from hibernation now?
They have been back from hibernation for a while. Results from companies like Tiffany that cater to the more affluent have put up sparkling results, and we honestly think it can continue. Even though there's still some economic challenges out there, the more affluent consumer feels better and they're spending accordingly.
Matt, Tiffany says its better than expected numbers are due in large part to demand from Korea and Germany. Do shoppers overseas have more discretionary income?
Some of the time, that's true. And when you think about young emerging markets and the wealth creation that rapid economic growth can create in places like China and some of the markets you mentioned, it's reasonable to expect a bit more of the same in terms of growth opportunity.
And Matt, Sheila, she did mention, because you talked about China, she said China's the superstar. Luxury sales forecast at 25%. That's not insignificant.
It's not insignificant, and it's becoming a major market for Tiffany. In a few years, we think that China could be over a tenth of Tiffany's sales, given their growth plans and just how rapid the growth is there.
Tiffany's strong showing came even after the company raised retail prices for some products to counter increased costs for diamonds and precious metals. Why weren't consumers fazed by the higher cost? Is this all about the Tiffany brand?
The brand is definitely strong. That's part of it, but another part of it just has to do with the fact that we are talking about a more affluent consumer base that's much less sensitive to higher prices, whether it's at the pump or, you know, whenever they're shopping for a luxury item like a ring or anything else.
Well, Matt, there was some concern. Tiffany did say the economic environment here in the U.S. is affecting spending on silver items. That affects entry-level shoppers. They might not be able to afford the bigger ticket items, but they want to purchase something from Tiffany. When's that going to turn around?
We think it'll take some time, and it depends just how far the income spectrum you're talking. The lowest quintile of consumers in terms of how much their households earn are going to take the longest by definition, and as you work your way up towards the more middle income consumers, those can come back quicker, and thankfully that's for Tiffany at least, that's where quite a bit of the trade-up spending comes from.
Matt, Tiffany says that it plans to open 19 new stores. That's not exactly a cautious move given the global economic environment.
No, it's not. I mean, this is still a relatively small store base, and we're talking about a global brand. So when you look around the globe, there's still plenty of places for Tiffany to put up stores. They have a very strong financial position, and clearly their stores are generating the returns that they need to. So we actually like their expansion ideas.
Matt, are you concerned that Tiffany's share price is more volatile than the broader market?
Well, it is a concern more than anything. It's just something that investors need to be aware of. We think Tiffany is a more aggressive suitability type of stock investment, and as a result, we just think it's important to communicate that to investors before they think about buying it. It can work both ways, and so far it's worked favorably.
Matt, in our final 30 seconds, what's the biggest risk to your buy rating?
In general, economic weakness and weakness in the stock market have historically been huge concerns for Tiffany's shares. When you think about Wall Street and wealth creation and just affluent consumers and where their wealth sits, a lot of it's in investments. So a steep downturn in stocks is a risk to spending at Tiffany stores and hence their stock as well.
Matt Arnold, an analyst at Edward Jones & Company, joining us from suburban St. Louis. Matt, it's always a pleasure. Thanks so much.
Thanks for having me.